Welcome back. Well, the markets are holding about that 17,050 odd mark, and some of those dips today actually are getting bought into. A couple of these insurance companies are doing well. HDFC Life and SBI Life have moved to the high point of the day, and big boy HDFC Bank as well has done pretty well. But let's focus on a couple of stock specific. We have Nimesh to join us to tell us about the Standard Brokerage report. Nimesh.
Hi, Nigel. So, both the city gas companies are buzzing in trade on the back of the CLSA note, and that was the standard as well. On IGL, CLSA has upgraded the stock to buy now. They've sharply raised the target price to 585 versus 420 earlier. On MGL, while they maintain a buy, even on MGL, they've raised the target price now to 1260. Now, CLSA believes that the regulatory regime will become more favorable from April 1st, and there is a pricing power which is returning back to the city gas companies. So the formula which has been proposed to cap the domestic gas prices at $6.5 per MMBTU will drive a 24% cut in the domestic gas prices from April 1st. And on top of it, the CNG is still a preferred fuel, and most of the OEMs are pushing for it, which will mean a volume growth as well for the city gas companies. Now, on IGL specifically, CLSA has raised the EPS estimates by 6 to 15%, and they believe the double-digit volume growth and pricing power is a rare, and hence a big upgrade on IGL. On MGL, the target price has been raised largely on back of the PE multiples being raised from 11 times to 13 times, and hence they've raised the target price on MGL as well. But largely, the big call is a big upgrade on IGL, and there they've raised the target price sharply now to 585.
Okay, all right, Nimesh, thanks very much. Those stocks are actually reacting to the call which we put out right before market opening. Nimesh, thanks for that. Now, Airtel, Bharti is back in focus. Rima is here with details. Rima.
Thanks so much for that. So, Bharti Airtel has introduced new, cheaper family plans in the postpaid segment, and this seems to be in response to Reliance Jio's plans, in the postpaid family segment, which were made known just last week. So, what Bharti has introduced is a cheaper plan. So, the earlier plan for a family plan in the postpaid segment was a $999 plan, where along with one SIM, you get 3 additional SIMs. But now, for a lower price point, Bharti Airtel has introduced a $599 plan. So, along with this, you get 1 extra SIM. So, basically, for 2 people. But it's just expanding the scope of the people. If maybe earlier someone found the $999 plan expensive, now they have a cheaper offering. Now, how would this compare with Reliance Jio? Now, Reliance Jio has, similar plans, a $498 plan, but this does not include OTT connections. And then they have a more expensive plan for 2 SIMs. That's a $798 plan, but this includes OTT connections. Bharti Airtel has gone ahead and introduced 2 new cheaper Airtel Black variants as well. And Airtel Black is basically a combination of postpaid, D2H, broadband, fixed broadband. So in a nutshell, basically what Bharti Airtel has done is that they've introduced cheaper postpaid plans for the family. So that's point number 1. This is to counter Reliance Jio postpaid plans, which were announced last week. It will also perhaps try and convince some of the prepaid family members to go ahead for postpaid. So they are targeting a lower value postpaid market with these plans. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, the other one that's seeing a relief rally today is HDFC AMC after a large trade took place yesterday. The street is wondering, GQG, well, they have raised some money. Where do they put that money? Time will tell. Vivek, tell us about that, though. HDFC AMC up 2.5%.
Well, absolutely right. So yesterday, in the session, you saw slightly over 2.2% of the total equity change hands, and most likely, GQG Partners has gone ahead and completely exited their stake in the company. The good part is, the entire stake was lapped up by SBI Mutual Fund. Now, as far as the HDFC AMC is concerned, the more important trigger to watch out for is that Aberdeen Investment Managers, that owns almost 10.21% stake in the company, on December had indicated that they are looking to completely exit their stake, and they had taken approval to sell 9.9% stake to a strategic partner. So that is going to be the more important trigger for HDFC AMC in terms of the stake overhang. Now, after that happens, what we understand from analysts is that, the stock that was deleted from the MSCI index has a very good likely chance of getting back into the index. So these are the key triggers, the exit of GQG, the likely, stake sale by Aberdeen, and then the MSCI inclusion is something that we are looking out for.
Vivek, thank you very much for that, and good getting those details. Now, let's shift